What is going on, everyone? Happy St. Patrick's Day, Monday, March 17th, 2025. Traded in the dog for some St. Patty's Day green in the markets. I'll share a look at the doc here. S&P doing some things as we expected, rallying back towards that 570 or 5,700 level in the SPX. Well, let's unwrap here before we have a couple Guinnesses. All righty. Hope everyone had a fantastic weekend. Let me get situated here. Still officially on baby watch. So I'm going to keep ripping some videos until no longer able. So let me share the doc here. I'll do a little bit something different. I want to give more so, a teaser, not a teaser, but I'm going to go through the doc really quickly first. And then if tickers, I've had some people give some good feedback that, some of the tickers are going to be talked about. I want to, extra pay attention until I have those tags and stuff. So you can basically skip through what I'm saying essentially and go through on YouTube and go through each ticker. As I mentioned, a dozen or so each time. So without further ado, hopefully, luck of the Irish to you. All right, so the luck was with these areas. A lot of areas today jumped. As you can see here, South Korea, retail and healthcare, they all jumped about 1 to 3%. Big rallies. We were talking about retail. That was coming off a 52-week low, and we were forecasting a bit of a dead cat bounce. We'll take a look at just how much it went up today. Healthcare, I haven't really focused on this in a while. Hasn't been, the absolute hottest sector to be in. Today had a nice rally. And South Korea, let's take a look at this move because it did advance quite a bit. So again, I'll preview the doc here. The gainers today, South Korea, retail and healthcare, as I just said twice. Losers, nothing today in a multiple sigma manner. So I'm not going to go really in the weeds here of this, but really everything was up to the upside. Also, there was more on this list, like real estate, that had a multiple or multiple standard deviation move. So the list today of gainers was, pretty vast. You had IWM up 1.2%, and a lot of that stems from that. Top three gainers of the past 5 days, killing it for the past week. GDX, which hit a new 52-week high today. Brazil. That's a bit of a rebound story because it's in the dumps, but these things are up, almost 2% a day on average. And Chinese internet can't stop, won't stop that group. Volatility looks like the scare is over for now, down 12%. It's the biggest. If you can look at the numbers here, down 12% is the biggest move of all the absolute trades. So down 12% in the past 5 days. Volatility peaked then. We'll see what kind of fashion we're in here. Nat gas, two big movers to the downside. It's been Nat gas, which has been a superstar, and then volatility, which has been a near, star. And then all the way after that, I did not, spin narrative or anything into this. When you look at the major ETFs with, a liquid volume after Nat gas, the next mover we have down 11 is down 3.5 real estate, specifically the home construction ETF, which has been getting clobbered. And then on top three trades of the past week, short vol, short nat gas, long gold miners. That has been the way that you got through the past week with Mega Alpha, okay? So let us go into the doc. If you have a ticker or something you would like to, have me go on the chart, go for it, and I will take a look-see. Right now, we're getting the white screen of nothing here. Hang on. I didn't have any Guinnesses yet, I promise. That's immediately following. Where did this thing go? Okay, there we go. So, boop, 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 boop. Just give me a sec. My screen thinks it's St. Patrick's Day or something. I don't know. All right. Here we go. Boom, 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 boom. Share the dashboard. Oh, here we go. So individual movers are really fast. I'll try and do a stocks video this week. Tesla, again, down 5% to the downside. Yikes. Chart does not look friendly. Does not look good. NVIDIA, same thing, down 2% today. That chart doesn't look good. Palantir, can't stop, won't stop again, up 1%. This had a bit of a reversal today, and then it actually ended up higher. So nice trading at a Palantir. Amazon down 1%. Netflix, one of the strongest stocks in the market, up 3.5%. Baba, as I said, a big constituent in that Chinese internet group, up 4.5% alone. IWM, we already talked about, up 1.2 for the small caps. AMD, this thing's a dog, but it had up 3.5%. Not a huge fan of that name. Intel, actually shocking, I can't believe it. A good stock. There's definitely worse stocks you can be in than Intel. Very positive news when they got that new CEO. People hated Gelsinger and whatnot, and this just the hope of a new CEO potentially to turn things around, understand the AI complex is enough to lift that company. And it's been bad for so long. We'll skip Broadcom, very small move. MicroStrategy, not a bad stock, down 1% today. All right, so as I zoom, we'll X out of that. So here is your intraday action. We started here. Again, this thick black slicing line going through is the 200 bar average. Each bar I have here constitutes 30 minutes. So essentially this chart goes back to the 11th or 6 days ago. Heavy resistance here at that 563 half mark essentially is where we ended up. We were tossing and tussling and wrestling with that level all the way into the European close. It actually is equal with the VWAP level. Very important number for today, the 563 half to 564 half level. And we continue to hold above that. And then finally, we broke out to high of the day at 2:30 p.m. We hit, I'm rounding, 570 in SPY. Right when things were really, really bad and hitting the can, I was saying watch for this market to at least get to 570. I don't think that number, and I'll zoom out to explain this, but I don't think the number that we had, the average for the market for the past year is just going to get thrown out because of some, even if he is the president, because of, some crazy things. But the market does hate uncertainty, and that's why it's a good thing that the vol VXX is the biggest mover in the past 5 days. It looks like, the fever broke. So again, this is the microcosm. We peaked at 230. We did sell off after that, but we did hold VWAP, so volume weighted average price. So good trading all in all. On the session today, lower than average volume. We have been seeing, extreme volume lately. So as I zoom out here, again, we've been saying that the S&P is going to be magnetized towards this line. A very important week because, so up here, we're averaging, we're adding about 20 cents, 15 to 20 cents a day on this 200-day moving average. It is at risk, of course, to close underneath and to have that stabilize and go flat and then go negative, which is not what we want to see. What I foresee here is about another 2 weeks or so of bullish accumulation. I want to put quotes around bullish accumulation here because this index is weak, okay? SPY is weak here under this 573 200-day. That is, I'll stick with what I was saying before, nothing happens under the 200-day moving average. So again, kind of like I said, if you have a fifth grader and he's spelling cat, you're not really, buying him, a cupcake. It's not really anything specially done. So when we hit 550 on the 13th, I was, that's just to avert disaster. So I said we were going to bump and magnetize towards that 200-day moving average, and we essentially got very close. High of day today, 570. I'm talking about the market 573, so less than 1%, obviously. I do think we get there. I think now over the next 2 weeks, it's not going to be easy, and we've been saying this all along. I do think you get very close to 580 over the next 2 weeks. It's not going to be a straight line. Good looking candle here. There have been buyers coming off of that March 13th low. I think these levels under 560 were oopsies, essentially, and I do think we will. So I don't think the 200-day moving average will go negative. I don't think that's going to happen. I think it'll potentially very much flatten, and then the S&P will hold above it, and then this week to 2 weeks will just be bad marks in time. Part of the chase as well to get to that 50, it almost equates with the 50 RSI as well as the 21-day exponential moving average is right around that 578 limit, right around that 578 price level. So again, I do expect us to hold that 200-day. I think it'll actually get above it by about 1% or so as we get into early April. After that, we're going to see, because that just coincides with the beginning of corporate earnings. And of course, as we know, JP Morgan kicks that off. I think it's like April 12th or something like that. They kick it off. So that's going to be pretty important. They'll talk about the consumer, which is at the focus of everything that's been going on. And potentially that is the catalyst to take us higher. So that is the technical picture. It's kind of simple. I mean, I do think we hold above this 573 line, as I said, and we get as high, as I stated, around 580. And then probably a little bit more wayward distribution, not that much wiggle as we oscillate and go around the 200 moving average. And that's pretty much it. All right. So, and trading looks to be doing just that. Let's take a look now at what really moved today. Ticker I haven't seen in quite a while. South Korea on fire today, up 3%. That is on fire for this ETF. So As you look at the chart, many, after being overbought here July 5th, I guess they had their version of Independence Day here. They peaked there, 7-Eleven. If you remember, this was the old NASDAQ high. That was a big tech surge. South Korea, Samsung is a major constituent of this ETF last I checked. So this ETF peaked at around 69.5, we'll call it, in July. 200-day moving average, pretty much a brick wall, I'll say, holding at 64. But the trading has not looked swell, and then really ugly trading on December 3rd, unless this is some kind of an oopsie here through my data provider, but that looks like a massive volume on December 3rd. And then later, on New Year's Eve, came the 52-week low of $51. Since then, we have had a nice bounce all the way to about this 57 level. I think this is in bullish accumulation mode as well. The 200-day moving average scares me in terms of it being extremely heavy. I do not want to own this, but there is a little bit more to go, I believe, in the next 2 weeks. And I think this rallies to 59 or the upper Bollinger Band. It did much, the lion's share of the work today, up 3%. I think has a little bit more to go, to be specific, about $1.15 or so, to about that $59 mark, where it would essentially match those Thanksgiving week highs. But after that, I don't think it has much more to do than that. It also coincides with the Yen-Mageddon lows at that $58 or 58.5 mark. So a little bit more to go, and I think that's all she wrote for the South Korea bounce. Speaking of bounces, so this retail name has been absolute just ugly. So I'm not going to spend too much time on this, but with all the talk of recession, this is majorly in focus. This peaked Thanksgiving week at $85, and then really no reason to own this past February 21st. An ugly showing with just nothing but being oversold. Now we have bounced. Now what, you say? Well, we were calling for before a dead cat bouncing this to about the 72 level. And I think, maybe I seemed nuts at the time. It was 67. This will continue, I believe, like I said, with the market, this 2 week or so accumulation phase that we're having. I see it as well, even in a dog name like this. I suspect this to get to about $71.5 to $72 over the next 2 weeks. If you're in retail, it's been an awful place to be. I think the next 2 weeks will give you a little bit of resolve. But overall, I don't want to own the picture. This is more so just tactical trading for oversold areas of the market. And then lastly, the nice big mover today. There was a bunch to choose from. South Korea, retail, healthcare. The next one would have been real estate on my list, and low vol stocks. There's, like I said, many movers. We'll take a look at this one lastly. So healthcare, as I said, this peaked on Labor Day at 160. So this is going back a ways from fall to fall, rather. And then the 200-day moving average really been just a flat line at 148, just for simplicity. And it's been that way since Veterans Day. Okay, I like to frame things in terms of holidays. Maybe it's because it's St. Patrick. Oh my God, I don't have any Eagles green on. Unbelievable. Go Birds green. So healthcare today, this group hit a 52-week low the day after the Fed cut. If you recall, on December 19th, this was an ugly group to be a part of. At 136, it went down to, and then now, what have you? This has rallied 1.25% on the day, and that is a multiple standard deviation move. Sadly, for healthcare, I don't love the trade. I think this is more of a complicated picture than the other ones. I think South Korea has a little bit more to go in the next 2 weeks or so. Retail, same thing. This was a little bit more complicated. This healthcare, just because there's not a lot going on. It's really been tethered, essentially, and range bound to this 200 moving average for the past 7 weeks. So kind of a boring forecast. In terms of the low, it potentially oscillates as low as 144 in the next 2 weeks or so. But actually just a handful of days, rather, I see this bottoming soon around 144, and then trying to hold right around that 147 mark. So for me, healthcare is going to be frustrating and not a fun place to be, frankly. So a nice day today, up 1%, but when the forecast is $2 down on a $140 name, and then potentially 30 cents to $1 up, those aren't trades I typically love. Except if you have a credit strategy on, you can you have to see what it's going to garner you, but you can easily sell a 143, 150 strangle in this, and then see what it costs going 2 weeks out. But the vol is somewhat muted in healthcare. don't love it. The only thing I'll say constructive is this has held largely above 50 RSI trading since mid January, and it's recently, because of that big bar March 10th, after traded below the 200 moving average, has now given that up, and now we've just recovered back to it. So a lot of zigging and zagging healthcare. I don't love it. Next, losers of the day. There were none on the multiple standard deviation, board today. So nothing to the downside. Everyone was just buyers incrementally, or in the case of South Korea, retail and healthcare, a little bit more so. Whew. Okay, largest gain of the past 5 days. We've been talking about this. New 52-week high today. We've been saying it was going to do it. It was going to break those October highs. It was very close. It was 40. I'll get really cute on this. 44.22. Today got to 44.64, and that's your new 52-week high. We've been talking about it the same way, and that you just have to have, I don't want to say faith, but proper analysis of the chart. When I see a rising 200-day moving average like this, you want to get long that. The same way as I don't want to get long healthcare right now because it just has more work to do. It doesn't have much momentum and slope. It doesn't have the wind to its back. This is kind of what I'm seeing, potentially seeing for SPY. We have this ugly moments here where we're trading under 200-day moving average, but still going up. Hopefully it, potentially still builds on that momentum. And for specifically the gold miners, which is new 52-week high today and one of the best trades of the past 52 weeks, this had a very ugly December 17th Fed cut week all the way till January 17th. It had a 1 month ugly period in time. It happens. It's in everyone's lives. Okay. You don't score in a game. You don't score with whatever. But life can be bad for a period and then it resumes. That's pretty much happened with gold miners here to new 52-week highs. I actually have a note on my book here. It said buy GDX February 28th at $40. And that's what I had it mentioned on the show. February 28th, right there. Yeah, it actually got as low during that scare at 38.5. I put out a signal on the show and I said buy at $40. You have about 10% upside. We got to the 10% upside right now in proper time. So again, these, like I said before, in terms of volatility, you're driving with in a storm with no wipers. When I see a chart like this, it's lessened volatility due to the momentum and the trend that exists here. So again, full evaluation. This was the target I was looking for. New 52-week highs. Of course, blue skies ahead. But for right now, this to me is fully valued. A nice day today, up 2% to surge and leap to its 52-week high. Be careful. It might have a couple more days, but I think with the bullish accumulation in the overall market representing beta pickup, I think they start to let loose a little bit of items like this. And I see this reversing towards about $42 or so over the next 2 to 3 weeks. Be patient. Gold's hitting new all-time highs today. So there's a lot of gold bugs that want to get exposure any way possible at different costs. GDXJ and GDX are the massive ways to play it. The reversal to 42 will be your entry, though, to get aboard, because I don't think this story is ending right about now. Easy way to trade: buy the 52-week high list, sell the 52-week low lists. If you're an amateur, people usually do the opposite because you think something's too cheap. You want to buy it, something's too expensive. You want to sell it. Don't do that. Market's smarter than you. And there's supply and demand. That's why they call it a market. Okay, so that's GDX. Absolutely rip-roaring. Congrats if you're in it. Up 10% in the past 5 days, or an average of 2% a day, which it did today. Next, this has not been a superstar, but it's had a rockin' week. Up 9% this week, EWZ. Again, look at what's happening here. You had an ugly flush all the way to about 24. We said look for investors to go into underperforming areas of the market. Brazil is really, it's my short I have on. It just seems like the safest short. You got to be careful with ideas like that. These guys troughed Fed cut day at 22.25, and now we're up to 26. So now what do we say for the next few weeks? Tactically, I think this is an overbought, for its relative range. I believe this is an overbought sell, similar to the signals that we had in early February, mid-February, and even when it was, I don't want to say a rock star, but it even reached overbought levels in mid to late August, August 19th, and it started going wayward and south from here. So again, lower lows. I don't think it bucks these December highs. I think the resistance is there. fully valued here about 26.5 as far as I'm concerned. I think this goes mean reverting correction to about 24.5 to that 25 level over the next 2 to 3 weeks. Potentially has a little bit more to go, but this 200-day moving average will prove to be too much resistance, I think. So it may have a little bit more to get to that 27, but then I think that would be almost like we talked about nat gas last year. Just sell it when it gets to that line. This chart tells me no reason to otherwise think that. The only thing is that it's had a little bit of sustained trading above the 50 RSI, and it could be the beginning of a turnaround, the likes of which we saw at nat gas last year. But this has had already, in terms of bullish accumulation, has had a very nice 2 weeks. So I think it's going to take a breather. And when this thing takes a breather, it takes a breather. And like I said, if the market in terms of SPX beta accumulation picks up steam, they're going to let go, I think, of areas like this. But that's Brazil, a very nice week, up 9% in the past week, up 2.3% today. And then, so again, gold miner, superstar, 52-week high today. Next, Brazil, not a superstar. They are rotating into dogs for the time being. And then this one, not a dog, KWEB, third best on the week. So you get a little bit of mix there. Oh, got a wave from a viewer from overseas. What's up? If you have a ticker, put it in. Appreciate you. So here is Chinese internet, up 8% in the past week, up 4% today. So absolutely rocking move. Again, FXI, is hitting highs. This group hasn't done it yet. Don't, be skeptical. Idiots are, for the most part, skeptical. This hit $39 in October. It's going to do it here. I don't know if it's going to happen today or tomorrow or the day after that, but this has the wind to its back. KWEB, I like it. I think it has a little bit more to go, just about to that 39 even level. And let me see, get cute. The 52-week high is 39.17. I'll say it gets very close to either piercing that 52-week high or just getting very, very close. It looks like this has a little bit more room to go. And then I do see a reversal, but just a correction towards that 35 half level. And then that would be your entry in about 2 or 3 weeks if you're patient. Potentially, if S&P does pick up and there is some confidence reinstilled in domestic and American markets, maybe they let the foot off the gas a little bit in the China story, and then that is your entry. But don't skip the story. Get exposure to China when that opportunity happens. Okay, top 3 loser the past 5 days. These are areas you do not want to be, and I always love when this is the first one, volatility, okay? So you could be making money selling options. The fear overall is coming out of the market. We clearly peaked March 11th at 60 in VXX. That's crazy. Objectively speaking, I'm just looking at, through VXX. We had to put in levels like that since the Yen-Mageddon week when Japanese yields and currency were going absolutely bonkers. If you look at the 200-day moving average on VXX, again, non-time series charting is difficult to do. This is based on the short-term futures borrow futures ETN. There is a VXY, there's medium-term, there's longer-term futures. The 200-day moving average is going up, albeit small. It's going up literally by up 2 pennies a day. Pay attention to all the stuff. It's at 47.5. This thing has hit 60 and really just been sells all the way down to 49.5. We're at a pretty, I don't want to say important time, but it's about to cross under 50 RSI. Once you see that, it's all right. Well, we'll sell it. This isn't in vogue anymore. Essentially, this is starting to get more sold than buyers, and it's the opposite trend from what we had here. So, similar to what I was just saying in terms of SPX accumulation phase, this is in distribution phase through, let me see what date I have for the cycle. Basically, I have the 11th was the peak. So on or around the 26th of March is when this should cease. I have it basing around that 50. It's VXX, so this is volatile, literally volatility. But I see us basing around that 48 to 50 level. And potentially, if the market really can recoup, and I'm talking about significant holds above 575 to 580 SPY, then you'll see this start to move towards $44. But I do think vol hangs in there, and it does give up this 200 moving average, but it's going to oscillate and be a little frustrating, almost similar in a weird way to that healthcare chart. All right, that's volatility. The biggest loser this week, down 12%, or an average of 2 and change a day. Today, down 4. So a nice bit of a vol crush. The next loser is nat gas. This thing is a superstar. I know I had a viewer from Italy asking about this. on Friday, and so this we'll get to that in a second. But so these guys peaked at $24 on the 10th, or last Monday. And this, we talked about it New Year's week when I was writing for Chart Advisor that nat gas does belong in your portfolio. Really take a close look at it. And I think this is starting to get set for an entry. I don't like the action today, down 2.5%. This is volatile. Okay, this is a $1.10 ATR, average true range, on a $21 stock. So this thing moves. I think this is in getting ready to base potentially around that 20 level, and that would be a great entry. I wouldn't be shocked if you don't get it, because look at these higher lows here. It is only a 3-day time frame, but it's been impressive to hold off that 21 handle. So, and this thing has been bullishly accumulated. This is largely traded above a 50 RSI going back to December 10th. So nat gas has been the place to be. Rising 200-day moving average. Thing looks great. So again, the 21-day exponential moving average is literally right here, 21.5. I think that is a fine entry. Much better would be 20, obviously, because 20 is lower than 21. And then full target is 25. I still do see this having momentum and new 52-week highs, and that will be probably coming in 2 to 3 weeks. So nat gas, a good place to be. I think it's setting up as we speak. And then lastly, you have to really zoom in. So the losers this week were Vol down 12, nat gas just right barely behind it, down 11. And then the last chart we will look at for the day is ITB, not down 12 or 11%, but down 3.5% to make its list on the third worst performer of the past week. So really, it's just been avoid vol, avoid nat gas, and then the real estate complex, much that had a good day today. This one, so up just 60 bips. Didn't have a rip-roaring day. Some of the other real estate ETFs had much better, XLRE, VNQ, IYR, etc. This one here, again, 52-week low on Thursday. This thing tagged 93.5, ugly. No reason to own this objectively. Just looking at the chart, no reason to own this since December 13. Once this closed under 112, just there's no reason. So now what? Don't love the chart. I think this wants to head towards. I think this has another rough week or two. Just don't love the chart. It doesn't look super constructive. This could head as low as like 93 again. I think this potentially meets its 52-week low. Don't love this chart. And on bounces could potentially take you as high as 98. And I think that would be a nice sell area. So this one, a more complicated chart, specifically home construction. And this has levers and exposure to, I believe, let me just pull it up really fast. This has exposure, let me see, lows, retail complex. So again, when XRT's at 52-week lows, this is going to drag it down with it too. Top 10 holdings of this. Oh, I'm sorry. Apologies. Whoop, whoop. That was the other one. ITB is DR Horton, Lennar, NVR, Pulte Group. These are actual home makers. I was thinking of the other one, which escapes me right now. All right. That is it for today. Good luck trading these markets, and we'll talk to you next time. Peace. Happy St. Patrick's Day. Have a Guinness or 3.